Hey guys, welcome back to a new video. Today I'm going to talk to you about what is staking, what are the latest news regarding staking, and what are the hottest way to make money towards staking. So if you don't want to miss any of that important information, make sure to like, comment your thought below and subscribe to the channel. Guys, on a little side note, make sure you check us out at PTGR.ag if you're looking at any consultancy packages with regards to cryptocurrencies. And let's crack on with the video. So guys, first of all, before we go into all the ways you can make money through staking, I want to go and explain at what is really staking for the people which are new to it. And this article by Coinbase is quite of a good summary at understanding what it is. So like a lot of things in crypto, staking can be a complicated idea because there's many different ways you can stake. But for a lot of traders and investors, knowing the staking is a way of earning reward for holding certain cryptocurrencies. So the way I think of staking in a sense is that similarly to stocks in the equity market, a stock will issue you, depending on the stock you're buying, but could issue you dividend. And that's the reward of holding and believing in their stock. And that's pretty much how I see staking as a way to the closest thing that you would compare to in terms of equity market. But how does staking work? It's if a cryptocurrency you own allows staking. It's, for example, you have multiple one that does it, such as Cosmos, Ethereum, and basically what happens is you have a staking pool, which you can think of as being similar to an interest-bearing saving account. And the reason your crypto earns reward while staked is because the blockchain puts it to work. And cryptocurrencies that allow staking use a consensus mechanism that's known proof of stake, which is the way they ensure that all transactions are verified and secured without a bank or payment processor in the middle. And that's what the whole cryptocurrencies is trying to offer, right? To reduce the amount of fees by cutting off the middleman. So why do only some cryptocurrencies have staking? And this is where it starts to get more technical. But Bitcoin, for example, doesn't allow staking. And to understand why is because basically cryptocurrencies are typically decentralized, meaning there's no central authorities running the show. And many cryptocurrencies, including Bitcoin and Ethereum 1.0, use a consensus mechanism known as proof of work, which is different of proof of stake. So this is why, for example, Bitcoin does not offer staking, right? But a newer consensus, which is known as proof of stake, has emerged, and it's the idea of increasing the speed and efficiency while you lowering your fees. And what are the advantages of staking is that many long-term crypto holders look at staking as a way of making their assets work for them by generating them sort of a reward, so sort of like a dividend. Staking has the added benefit of contributing to the security and efficiency of the blockchain project you support, and by staking some of your fund, you make the blockchain more resistant to attack and strengthen the ability to process transaction. The risk, what are the risk of staking is that basically you're vesting, you have this vesting period, and think of it like your money being stuck in a private equity deal, meaning that you are not allowed to take out that money within a time frame period which you are staking your crypto, right? So it can't be transferred for a certain period of time, and this can't be drawback as you won't be able to trade stake token during this period even if the price shift. And with the crypto bear market, a lot of price sensitivity. Well, this is what a lot of people fear. So what's been happening? I mean, you have different ways of staking, such as yield farming versus staking versus liquidity mining, and all of these are different. I don't want to spend too much time on all of them. But yield farming is the act of generating rewards such as interest in cryptocurrencies by staking assets on dApps through a DeFi platform, and the cryptocurrencies is locked up for a certain period of time and acts as a liquidity for lending, borrowing, and trading. All of this is very new, so you have a lot of uncertainty, you do have some risk, and the difference is what is liquidity mining, for instance, is that liquidity mining is a form of yield farming and it works on another DeFi lending protocol where the users will stake their cryptocurrencies into a pool to be used by other users, and the liquidity mining reward are focused on receiving coin from the platform they are lending. And so, what is staking? Finally, we talked about it. Is between yield farming and liquidity mining can often be used as an interchangeability, but there are some key differences, being that staking is often seen as the simplest of the three and the most accessible to the average crypto enthusiast, because you do have more these complex mechanism. And so the easiest one to understand and to start with is staking. Now, Coinbase, for example, with recent news, adds Solana staking reward with higher return than Ethereum, and now the Coinbase users can now earn passive yield as high as 3.8% by holding their SOL in the Solana network through their Coinbase account. So that's a nice a new staking way method. If you're a holder, for example, of a Coinbase account, look into it. If you're holding Solana, you could stake your Solana and get a return on it, and sort of a dividend, and get rewarded for staking your Solana. And they're offering basically a staking method for Solana which offers higher rate than Ethereum, which is pretty impressive, because it's allowing their staking benefit for Solana holder. And it's pretty impressive to see that by comparison, Coinbase currently offers its user 3.675 APY on Ethereum staking, whereas it offers 3.85 APY staking for Solana. So that's really good news. On another thing is that Ethereum staking firm waits in on crypto carnage. A lot of people still didn't unwind. What's happening is that Ethereum staking from Lido Finance, whose derivative product are a component in the crisis currently indulging firms like Celsius and the Three Arrow Capital, saw the writing on the wall and tried to nudge some big players to unwind their leverage position, but many didn't. So that's the concern that a lot of people have with staking. You know, you're leaving your money basically to these firms to handle it, and it's part of a pool, but you do have some risk, and that's the problem and the concern that many have. And you have the leverage concern because becomes most apparent after Lido became integrated with decentralized finance giant Aave in March of this year, explained by Jacob Blish. And so when we saw the leverage issue was starting to really come to a head, we tried to take a few initiative and ended up spending a few $1 million to allow some larger players to unwind. So this is quite a controversial topic to see, because it shows that again the big whales have an upper hand even on the staking mechanism, and that they are able to play their position. And so that's a little bit on the worry side, to be careful. Another news which I thought was interesting by CNBC is what you need to know about Stake Ether, the token at the center of the crypto liquidity crisis. I mean, this is very controversial, all because all because of the fact that you have these big firms which are involved in this liquidity crisis of people not being able to actually pull out their money, and they're actually stuck and they're unable to get their cash out. And this is the issue that you can get with staking, because basically you're blocking, you're freezing your money. And so ETH, for example, isn't a stablecoin like Tether or Terra USD, but the algorithm stablecoin that collapsed last month under the strain of a bank run. It's more like an IOU, the idea being that ETH holders can redeem their token for an equivalent amount of Ether once the upgrades completes. And so what's very scary is that Celsius has more than 400 million in ETH deposits according to data from DeFi Analytics. And the fear is now that Celsius will have to sell its ETH, resulting in hefty losses and putting more downwards pressure on the token. But that's easier said than done, because the ETH holders won't be able to redeem their token for either 6 to 12 months after an event known as the merge, which will have to complete the Ethereum transition from proof of work to proof of stake. So we'll have to see how that moves forward. I will continue making updates on the staking part. Another news which I found was interesting is that Coinbase is offering up to $50 in reward for staking Ethereum, just because of how controversial it is right now. They're trying to raise money into staking of Ethereum. But what's also is that you're seeing new projects like what Polkadot new staking dashboard means for DOT. You have different way of staking which are starting to emerge. You could say that the 2022 crypto market crash has been huge, and almost every cryptocurrency has received a deep discount, and Polkadot is making an effort to ensure that those bank dip can put their DOT to good use. And Polkadot recently revealed the rollout of a new crypto staking dashboard that was designed keeping users' friendliness in mind, and the number of Polkadot nominators surpassed 30,000 shortly after the new staking dashboard was unveiled at Polkadot Decoded. And so this is great to see because it's a very innovative way to have staking, and new coins are coming with new ways of staking that is bringing in fresh air to this bear market. Finally, you have cross-staking team champion eco-friendly blockchain developed at DHEH Barcelona in 2022. You have these development and R&D that are looking into new alternative of staking that is more efficient and less risky for the end users to prevent situation like we are seeing with Ethereum currently and Celsius holding hundreds of million in ETH positions. So guys, if you don't want to miss any information in regards to staking and any of that important stuff, make sure you comment, like, and subscribe so you don't miss any of that important information, and make sure you check us out at PTGR. Guys, thank you for watching. See you next time. Bye.